Good morning, good afternoon, and good evening, everyone, from wherever you are in the world today. My name is Roy Sarka from MindBridge AI, and you've joined the Unveiling the new release of MindBridge AI Auditor. Today's host will be John Cothart, VP of Growth and General Manager for Audit and Assurance. And now we'll start right away, and we'll hand it off right to JC.
Awesome. Thank you so much, Roy, and thank you to everyone who's joined us. This is really a fantastic opportunity to give you a little bit of an insight into what we've been working on over here at MindBridge AI as we start and continue to champion access into the audit spectrum, accountant reviews, and other things that public accounting firms really want to do, which is embed data analytics and high-powered insights into their overall programs for their clients. So we're going to start with a little bit of a recap because some of you are new to the AI Auditor and to what MindBridge does. I'll give you a little bit of a recap. I'm going to go right into what's new and really talk a little bit about how you can take action from here and going forward. So really what we look at is it relates to looking at moving forward with auditing, moving forward with accountant reviews, compilations, even notice to readers, is this ability to start bringing together all of that data that you really want to have in order to be reasonably sure that there aren't any material misstatements. But let's go a little bit beyond the consistent phrasing around reasonable assurance. Let's actually push it further by starting to get you a quantitative risk-based score across all 100% of the transactions and entries that are going through a business in order to really give you a sense for where there might be potential risk of misstatement, where you might need to focus as part of your engagement with your client. And if you think about advisory and other things that you do in your business lines and other business lines and business owners within your firm, actually driving forward with this approach as well to start creating other things like health checks, fraud checks, all these other things that you might do for your clients. So how do we do that? Well, we bring it all together with a series of different technology and different techniques that really comes into this umbrella that's called an ensemble AI. This ensemble AI takes everything you're used to, the ability to go and look at which transactions and which entries were weekend posts versus manually entered versus, were top 2%, top N% of the overall ledger over a certain materiality threshold or individually significant item amount. These are all what we would classify as sort of domain expertise and rules. These are things that you're used to looking for. Maybe you're using a technology, most likely Excel or a spreadsheet tool, but sometimes you've got other technology that's helping you filter through those lists. We want you to be able to continue to do that. We want you to be able to use what you know. Enhance that, though, with new things like additional statistical models and methods. Some of you have heard of Benford's Law. It's been in a bunch of the computer-assisted audit tools and techniques for a couple of decades now. But there's other types of statistical models that we can use that can really enhance the factors that go into the success of finding something that might be unusual, might be a high degree outlier, and fit into those standards that you use in your everyday business of engagement. But then there's these two boxes at the right-hand side, which are really where the key power comes into AI Auditor, which is leveraging things like machine learning, natural language understanding, and processing, and neural nets, and all those types of sort of AI capabilities to really dig in, find those very specific rare items, rare flows of transactions, rare flows of entries. So what we do is we bring this all together, we link it all together and give you an explainable view of why we think something has a higher degree risk factor than not. So that's what AI Auditor is all about. Why did it come? Why did we get here? Well, because 3 years ago, we started on this journey to really uncover the bottom end of this iceberg. We know that there's a huge amount of loss going on in the world markets. We know that your job as public accountants and chartered accountants around the world is to help your clients be more effective. And part of that is to ensure that you're reasonably aware or sure of what those financial statements are saying. The problem is that sometimes we just can't see everything that's underneath the waterline because we don't have time, we don't have the energy and the expertise to go and really look at what is fundamentally different from one entry to another without trying to get all of the eyes on it. So at the end of the day, it's all about creating an experience that is all around making sure that we can give you the explanations of what's happening in that business that you're engaged with. Your clients are looking to you to be that trusted advisor to really show you additional insights, additional values of what's going on. So the ability for us to weed through all the entries that are going on in the business, give you the intelligence you need to decide what's going on into your business, and the ability to move forward here is what we're really trying to go after. At the end of the day, it really comes down to why would you look at this, and we're about to in just a second, is because we are in this seismic shift in the industry. Every part of the industry, every part of your business is looking to transform. Advisory is trying to grow. Risk services is morphing and changing and bringing in elements of not just, fraud assessments and other things like that, but actually where is the risk in the business continuity, which always leads back to either your tax group or your audit group in terms of what's happening within the data that you're always able to see. So how do we deal with this and how do we move forward? Well, we give you a real platform that allows you to really take the best artificial intelligence techniques and capabilities in human augmented form so that you can actually understand it and start teaching your team to be using that data versus becoming data scientists, right? We don't necessarily need to have data scientists or chartered accountants turn data scientists. What we need is the tools that the data scientists use to provide you an explainability of what you're looking at in the analysis that's already done in order for you to be able to use your judgment, the thing that you spend years and years at school for, then as a junior, into an intermediate, into a senior, and hopefully into a manager and then partner, right? That's what we want to do. And we want to make it real. We want to make sure that we're able to really drive high-level insights, give you great efficiencies, and very, very quickly get into all the information you need so that you can redefine what that view of reasonable assurance is for your firm as you do these types of engagements. And obviously, the big thing is get on the train of artificial intelligence as part of your practice, not just because other customers are doing it, because it makes economical sense. Looking at this from the perspective of how do we move forward? How do we compete with the big four? How do we compete with the top 100? How do we compete with the top 300? How do we compete going forward? Well, we give you a tool that democratizes this need to spend millions and millions and millions of dollars on developing and implementing AI at a fraction of the cost that you would think in order to really drive enhancements into your business lines. Now, let's talk very specifically about what's new, and I'll talk a little bit about why it's important as we go through the demonstration. The high-level bubbles, there are 4 of them, as you can see: libraries, ratio builder, ability for further not-for-profit understanding, and then obviously getting down into the ability to add additional annotations and exports for your teams. So what does that look like? Well, let's jump right into the solution. Let's go take a look at what's happening in AI Auditor. So AI Auditor is designed to be a great front end for all of your team members. This means for every single team member, going from your audit partners, your potentially any type of directorship you have who might be working on other lines of business who are not in that partner ecosystem, all the way down to your junior team, right? Even as far as interns, if you so choose. Why? Because it's a way for you to aggregate all of this data that you need to sift through anyways for your engagements and give it to you in one easy to use space. So as I log in, as you can see, I've got a message here from Ben over in our customer success team telling me a little bit about this new release. It also gives me all sorts of interesting insights into the blog. And because we want to interact with you at any and all times, you can actually just write a reply in here, and Ben or someone in the CS team will get back to you and give you other information and insights. Logically, I've got everything stored and structured such that I can see all the organizations that I've been working on, anything that's happening in my businesses that I have purview to. So again, thinking about your engagements, thinking about your roles, you want to start creating the ability for you to go from any type of engagement, from one engagement to another. If you're at a senior level, you might want to see the whole view, or if you're just one of those folks who have just joined your firm, you're in that junior or intermediate stage of your career, you might just have one of these things to look at. So very, very quickly, you can see all the different pieces of information. We can very quickly go in and see information that's already been done. So I'm going to go and look at what my friend Stefan has done. And you can see here, he's done a little bit of analysis around general ledger. And in this same organization, he's also looking at the payables and the receivables. Now, every single one of these is driven by a bunch of different data that you already asked for, things that you're already curious about, opening balances for AP, the open invoices from an AR perspective, looking at customer master list, vendor master list. You want to make sure that you can interrogate all that data. But how hard is it for you to actually sift through all those data files and really find the one piece of good insight or good information to make sure that you can validate against any one of those? We try to provide a really easy and quick way to view this data. So I'm going to very quickly go into the first one here, just looking at the general ledger. Now, when most people think about general ledger, they immediately think journal entry testing. That isn't what this is. This is all the transactions, including all the subledger transactions that are being posted up here, and we're assessing all the risk across all the different pieces of the business. Why is that important? It's important because what you now have is you have a complete view into the risk factors that are going into this business. You have it based on monetary values and flows within the transactional pieces of the ledger. So I can see here I've got a few things that the system has recorded as potentially a moderate level or a medium level of risk factor. And I've got a lot of things that are in low risk. These are great things for me to be able to see right off the bat. I can see when over time these are. If I load 5 years of data, I can scroll through this graph, go backwards and forwards, see where over time things are. I can even go down to the daily level if I so choose. And I can obviously go and toggle and find out exactly where those medium risk factor transactions are. And down below at the end, I can also see from a hierarchical view how things are processed through my business that I'm auditing or that I'm doing a review for, or that I might be doing some advisory work for. So I can see right here very, very quickly and easily, I've got the assets classification as being, just eyeballing it, maybe about 50% of all transactions hit assets at some level. But what I get to see very quickly as I radiate out is that not only is it this nice rich green, which means fairly low risk factors, meaning it didn't trigger a lot of interesting things about the data, I can see all the way down to accounts receivable. Whereas on the other side, in this liability slice, I can see that trade accounts payable has a higher degree of potential risk than anything in my accounts receivable. So when you think about building your audit plan, when you think about building your agreed upon procedures, if you've already got some of this data from your client, you can really focus in on where you're going to spend time on your engagement, what's really interesting and what's of course necessary. So I'd obviously pick to spend a little bit more time maybe in payables just because it has a higher risk profile, as does equity. This one's trending yellow, not necessarily the type of color we want. As we all know, when we look at private businesses, there's lots of things that can happen in that private business that might mean that they've just done something that probably is an error or just needs to be explained so that you understand where that capital is flowing. And this might be one of those areas that triggers more often. So how does it trigger though? Like that's really one of the interesting points that everyone asks. Well, it triggers based on all of these classifications. When we look at the general ledger details, we look at every entry. We look at all of these 28 different sort of risk factor control points: material value, end of year, start of year, or end of period, start of period. Looking for the traditional rules that you would segment out. I want to see how many of them are in my top 2% of monetary flow. Well, there's 42 transactions that have been triggered by that score weighting. I've got 245 transactions that were done over the weekend. Manual entry, I'm not seeing any on the list here right away. I know it's here, but I'm not seeing any that were triggered by my manual entry. So maybe everything is coming through one of these subledgers. But now I've got some other things that are more interesting. Flow analysis, unusual amount. When you look at the standards today, you're asked to look for unusual amounts or outliers. Great, I've got 4 transactions that I can really just dig right into very quickly, see the entries, understand what they are, be able to dig into the details of not only what's there, but what are those factors that are causing that type of view. So what you have right away is you obviously have this ability to really dig into the details, really understand what's happening to your client's business performance right down at the entry level. So I can understand in this particular case which line items actually hit my cash expenditures. Obviously, it would make sense that it would be the bank account, but I can also see that whether there's specific outliers. And in this case, the outlier is actually in these 2 tax accounts that we use up here in Canada. HST is one of our fundamental tax schemes, and it's both of them having high degree outliers. They also are triggering the expert score. Why would I be debiting and crediting 2 different types of tax in the same transaction? May not make sense. Normally I might, process these a little bit differently. So we use all of these machine learning algorithms, all of these rules, and all of these statistical models to give you an appreciation of what's happening in that business. Now, as I said, you're potentially going to also want to look at things like your receivables, your overall elements of information that are coming through from a customer basis. So you can go and look and see, are there any risky customers? Oh, there is a risky customer. There's a couple of others that might be worth investigating. So when you think about your planning, when you think about going through to your actual selecting of samples and deciding which entries or which transactions you're going to put into a plan to have some of your junior team go and take a look at as they do their field work. All of this is really simple. Click, understand which customer in this case has a higher degree of risk. I can then go further build upon this and add additional elements. So it's that particular customer, Futherton, but I also want to make sure that I only pick out things where there are, let's say, outliers or unusual amounts. So I can go ahead and select those, the ones that I want. I can apply this filter, and it very quickly goes and finds me all of those entries. So there's 400 items that have outliers. So this particular vendor has a higher degree. I can very quickly then say, from there, I'm going to go in and select my sample size of things that I want my team to go do. As they're looking at this top customer who has a higher degree of risk, I want them to go and validate 10 of the different invoices from the period that I'm auditing. I go in, I add 10, it grabs me the 4 highest risk transactions, gives me all of the, it gives me a 60-40 split between the medium and low risk, and it goes and randomly selects those bases. So it goes and grabs me all of that data. Now I can go assign those, have my junior team go off and collect their evidence to ensure that those transactions are in fact valid and normal, and they can go in and flag those for me. So I can always know exactly where we are within that cycle. So again, this is just the standard stuff. Now we'll start transitioning into, let's talk about what's new and what's exciting. So first and foremost, one of the things that's very clear in most public accounting firms out there today is you have your niches that you're really great at. When you first came out of school, you did your work maybe for a big four, and then you branched out into your own, working either for a smaller firm or building your own firm. You always had a niche that you probably gravitated to, whether that be manufacturing, agriculture, some other piece. One of the things we did in the most recent release is we gave you the ability to create libraries. These libraries have the ability for you to collect a whole bunch of information about how you want to investigate this, these types of organizations. So you can automatically set up things like, and I'll just go into one that I have here that is test. I can go in and set up brand new ratios that I want to look at. If I'm looking at agriculture, I might want to look at revenue per acreage as an example. I can go in and build new ratios very, very quickly, just clicking on the create new ratio, adding in the methodology, so per acre revenue, and I'd be able to go in and say, okay, let's go and grab the revenue line that makes sense. In this case, it's probably one of my main business income revenues. So I'd probably pick that line, and then I'd go through and I would actually then divide it by probably a numeric value of my acreage. And I'll just say that it's 10,000 acres. And away I go. I've now built a ratio that I need to use or want to use. I'm going to put this under activity. And now in this library, every time I go after one of my agricultural businesses, that revenue per acreage is going to be sitting available for me. Sorry, I called it per acre revenue. Is going to be sitting there for me, already pre-calculated, already reviewed. So what does that actually do? What do these ratios do, and what do these libraries do? Well, it allows you to have commonality. It allows you to have commonality in your business, allow you to flow those things through. So as an example of that, if we want to go and look at some trending, so just a few minutes ago, I loaded up some new data, and I can actually go and see how some of these ratios are represented over time. So part of this, pathway to you being able to understand what's happening in the business is give you as much context as possible. Now, in your traditional engagements, at least from an audit perspective, usually from a review or a comp, you're likely to look at the last calendar year's worth of data or fiscal year's worth of data, plus or minus 3 months on either side. You might get quarterly statements for the year before and the most current quarter just to look at. But what we ask for is as much data as you possibly can. Why do we do that? Because we want to show you what's happening over time with this business. As you can see, my 2014 data, this bottom row, really not that, fantastic in terms of my overall assets, but I've been building over time. I can change this and go look at the income statement side. So I can see how did my revenue go over time. So my revenue kind of has these dips and doodles and things. All of these are fully interactive charts where you can drill into the details, you can find out the data that's under them. And what's really amazing is when you start looking at these, you can actually start seeing where over time some of the issues are. So in this particular case, I just scroll down a little bit and I see my cash receipts to revenue, and I can say to myself very, very quickly, there appears to be an issue. How do I know that? Well, first, the blue band, the shaded area, is the expected range. So when we grab as much data as we can, 4 years historical plus the current year that you're working on, we're actually going to be able to statistically find this pattern in the data and show you what that expected range is. That's what that blue shaded is. So I can see right away the months and the years that are outside of that band. But more importantly, if I just remove a little bit of the data, so I can see a much clearer picture of what's happening in 2018 versus 2017, and I add in the predictive forecast, I can actually now see where should that have been based on all that historical data. The red orbs are the degree outliers, so I've got one in January, May, June, and August. So now when I think about this, how do I implement this and why is this so important? Think about the fact that you've got libraries now where you can build very specific ratios to niche areas that you engage with clients, whether that be by industry, by type of engagement, and then immediately, the minute you have data, you get all of this type of insight. I can see those ratios real time. I can see exactly what the band should have been, and I can see the predictive forecast. And now I know, okay, for this business, there might be some risk because their cash receipts to revenue appears to be very, very skewed, at least in the months of June and August, but moderately skewed in May and January. So I can think about this from my planning side of my engagement. I can think about this across time. And what I can tell you is you'll be able to get way more insight and impact to your clients. Now, I did talk about some other new features, one of which was annotations and export. So right away, we can give you the math, exactly how things happen, but really importantly, we can actually start adding commentary. We can add commentary and ask our team to follow up on things. And at any point in time, we can export all of this great details. So I might want to select more in, it was June and August, and review January and May. So I can leave that notation, and then maybe, down the road, I'll just go at it from a perspective of as if I was a different user. We'll assume that someone else is logged in, and now we'll say it's my, it's my junior, and my junior goes and pulls things and says it back to me. Well, June is off because of new terms to increase sales. So something has happened. They've gone back, they've looked at the contracts, and they've looked at the things that they need to within that revenue stream, and they're not getting the cash receipts because maybe in May they actually made a change in their terms of when customers pay them. So of course this would be someone else's ID, but now you can see the idea. I can go in and I can see all of these pieces. Anytime I do create an annotation, little blue orb comes up and tells me. So if any of my colleagues are also working on the same engagement, we've got a team of maybe 2 or 3 or 4 folks working for that engagement, they can all be collaborating real time, all looking at the different pieces, leaving each other notations, and at any point in time, they can actually export that out and use it for audit evidence. So I can very quickly go and run the export. It's going to go and grab things and dump it into Excel for me. And it's not only going to give me the picture and the image, it's going to give me all of the comments, all of the stream of consciousness that people are inputting into the data. It gives me the chart, it gives me all of the commentary, and it also gives me all of the data if I want to redo this and use this in a different thing. Say a PowerPoint presentation or a slide presentation where you want to produce some of this information in another way to show them maybe a specific view of this data. So our goal here is to always give you tools where you can augment your own capabilities by just getting the data as quickly as possible, reviewing it, and then using it to the best of your capabilities, to the best of your judgment. So that's one of those other new features. So we've talked about 2 of them so far, well, 3 really, because we talked about ratios. But what you have here is the ability to see all these elements. Now, the next piece is and a big piece of what we did is we started working on not-for-profit. In order to start explaining what we've done, I'm actually going to go back to the libraries and show you what the not-for-profit library looks like. There's actually 2 of them as system defaults. If you do all different types of NGOs, maybe school boards, other types of entities, you may decide to augment these. You can very quickly create a new library, take over either the for-profit, the not-for-profit, or the funds, and it will actually move things across. But if I go and view all of that information, I'll be able to see exactly what's in there, what ratios, what control points, and what filters are pre-built. So I'll start with the for-profit with funds. Now you can imagine without funds, it's just one fewer things for the analytics to pick up. But with funds, this is where you might have an entity that you're auditing where you've got some form of restriction on where those funds can be spent. So that's what this is all about. And we very quickly have a series of ratios. Again, you can add to these, but we've pre-built some that may make sense. The liquidity of those funds. So the ability to go and see dynamically at any point in time whether or not we have the liquidity of the fund, see what the overall amount is. We can go and see what the assets to liabilities ratio is. We can go and look at very specific things like repairs and maintenance as a percentage of PP&E. This is the type of data that you might want to use to understand how that not-for-profit is running. So all these ratios, just by default, are automatically there. You can see exactly how we've suggested you calculate them. And of course, if you decide to, you can add more. You can copy this over and edit some of these. All of these types of capabilities are there. The other thing that we've done is we've pre-built a series of filters. Now, these filters are really important. Think of these as gateways to your procedures. Think of these in terms of gateways to the population of data that you want to review and understand if there's any material impact to the financial statements or anything that is of concern. As you can see, we've got a typical list of journal entry filters right away, what's happening at the end of the year, the beginning of the year, anything that's manual, anything that's material. So all of those available for you, you can use them. They're just in a drop-down, away you go. In these types of cases, you actually might want to also look at expenditures. So going and looking at, especially when we're dealing with not-for-profits, the ability to go in and look at how the expenses are being flowed through, how things like repairs and maintenance, how things like payroll are being done. All of these types of filters are all automatically designed and developed for you, even to the point where you have unrestricted fund cash expenditures versus restricted. So very quickly giving you within single clicks the ability to filter into that population of data, understand what expenses are going through on your funds, both from a restricted or unrestricted perspective, and understand if any of these funds have also been allocated differently across different funds. This is a fantastic way where everything is pre-built, pre-designed for you. You can drop your data in and go and assess it and analyze it. And then finally, control points. Now, we didn't talk a lot about control points early on, but we have added new control points as part of this entry into not-for-profit. Both for funds and without funds are a little bit different, but they have a lot of the similar capabilities. So all the traditional general ledger, receivables and payables type information is available to you, but what you actually get is the ability to start seeing some very specific things. For example, when we're dealing with not-for-profit with funds, we can have an expense flurry. That expense flurry is all around trying to find out if there are expenses in a given fund which are higher than usual, where the activity is higher or the amount is higher. So one of the reasons that we look at this is we want to make sure that we're not improperly coding things to the wrong funds. That's one area, but also we want to make sure that the fund isn't improperly using the funds that they were managing to. So that's a control point very specifically designed to be around looking at the funds, looking how those expenses are happening, and if there are any types of times or amounts that are being generated that are higher than usual. We also look for things like interfund transfer. So we have interfund transfer, the ability to look at very specific control points that will try to find if there's been any type of shuffle of assets from one fund to the other, making sure that things, again, especially when you think about any that have restriction, any programs or funds that have restriction, you want to make sure that you know exactly which transfers have happened, which funds they impacted, so you can very quickly see that. So we flag those. We give you the ability to just drill in on those quite quickly. And then there's a few others just down at the bottom here, specifically around splitting of transactions. So looking to find if there are any transactions that occur sort of on the same day or have the similar expense classifications, but split across multiple funds, or flag where there's a single expense, but it's split across multiple funds. Why? Again, you want to make sure, especially when you're thinking about not-for-profits, these are folks typically that are, executive directors, and they might have a payroll clerk, they might outsource their accounting. You want to make sure that they're actually healthfully guiding that organization and making sure that they can continue. Things like split expenses, interfund transfers, those are the types of risk points and risk factors that you want highlighted right away. So what do? We automatically give those to you. So again, what you have is you have all of these libraries very, very quickly and easily digestible. You have the ability to, again, augment and change. You can create net new ratios, you can create net new filters, and then they can be applied across any not-for-profit. So if you have different classes of not-for-profits, as I said, you might be looking at non-governmental organizations, you might be looking at school boards, you might be looking at actual municipal versus state type auditing. You can now actually get into the business of making sure that it's all set up once and it can carry on in every single engagement. Imagine, if you will, taking that partner or that senior who's spent all those years working inside of the not-for-profit space to be able to imbue a lot of that knowledge, the types of ratios, the types of things they want to look at, the types of filters that they would use on the transactions to make sure that we can audit these as expediently as possible, align to our procedures. Imagine if you could just imbue that into the system. Well, guess what? You can't. You do that all through the libraries. So again, great way to actually go in and just, collect information, but specifically for not-for-profit, you obviously have both with funds and without funds. The ratios, the libraries are very similar, but obviously the control points are a little bit different. When we're not focusing on fund structures, we're just really looking for things like an expense story, making sure that there aren't expenses that are hitting the wrong or improper spending for the different places. And then obviously still looking at all the other things that we do, like looking for those outliers, those unusual amounts, looking for the strange behaviors and flow of the data to make sure that you can see all the patterns as quickly and as expediently as possible. So that's a little bit of a snapshot into what not-for-profits is. I'm just going to take a small little break, look at the question and answer. If you haven't actually seen the question and answer little orb, I'm going to go ahead and take a quick look at it as I bring up a not-for-profit scenario as well. Hang tight 1 second, and I'll just take a quick peek and see if Roy or Carlo can help me out with that.
Thanks, JC. It looks like we have a number of questions coming in, and I certainly encourage everyone to ask any questions or provide any comments on what JC is presenting. We do have a number of questions in already, so we can start with the first one, which is from Michael, and the question is, can you group ratios into different buckets for different purposes?
You absolutely can. I mean, that's the best part about leveraging libraries. You have this ability to really define and refine exactly how you want to implement and execute different procedures, different analysis points against either industry codes, against anything you want in there. So absolutely, you have that ability to very quickly go in and see that data and be able to combine them into profitability versus this versus that. So you absolutely get all that ability very, very quickly here.
Thanks, JC. We do have another question while you're getting the next section ready there. And the question is, this one is from Linda, and the question is, what data can you use to create the ratio formulas? So my interpretation is that, for the top and bottom, the numerator and denominator for the ratios, what options are there for those?
So for that one, I think I might actually go right back into where we were with libraries and show that. I'll just pause what I was looking at. Let me just go back into, so this is kind of the neat thing about creating ratios and having these capabilities. You really have a whole series of things that you can do. So back to the first question, can I categorize these? These are the three I have in my default list for profit, but I can add anything I want, right? So I'm going to have a new thing. But what you end up with is in the numerator denominator section, you can actually do a number of things, right? You can add things like the bracket groups. Imagine going back to the math school, going back to your math classes at school and having to do bed math, right? We can create bracket groups. We can do all sorts of things in there. What we then do is we have the ability for you to take any structure within your defined hierarchies for that business. So you may be using, Caseware or CCH, and you might have some custom groupings that you already have implemented across your firm. You have those listed here, like what are the different groupings of different areas. And then obviously it all comes down to sort of doing the maths. So I'm going to very quickly just do something that's going to be potentially nonsensical. I'm going to take my closing revenue balance. I'm going to multiply it by some factor, maybe a numeric interval. which would be really silly to do, but I'm going to multiply it by 2. I'm going to have that added in here. I'm going to go ahead and then, divide all of that by something else. Maybe I'm going to divide it by my expense category, and then over that entire ratio, I want to divide that or multiply that by, by a specific amount. So I might want to then multiply that by 100 to show it as a percentage out of 100, right? So I can very quickly do all of that work. It's going to give me little notifications. By the way, if I click a thing here, you'll notice this little expression invalid. It very quickly gives me all those pieces of guidance and showing. So in the ratio builder, it's really, you can take any type of piece of the data elements from the natural hierarchies that you're used to using. You can use any type of financial factoring. Think about it like an Excel formula, building those brackets, creating any numerator dividers. And then again, because you can group them and you can put them through, they very, very quickly get the ability to, to be implemented across any engagement. Now, what we will do eventually is we will give you the ability to do these real time on the fly, but we do these in libraries today because we feel it's a great way for the team to try to use one single version of, we're auditing this agricultural, business this way, right? So we use them in libraries today. We have heard from customers they'd love us to open that up and let them do it, kind of on the fly. We'll give them that capability, and we'll have those connected into the library sometime in the future, I would believe.
Thanks, JC. We have another question as well. This one is from Bert, and the question is, another group within our firm does not-for-profit audits. Can we segregate which group has access?
Yeah, so sorry about the echo there. Yeah, so access management is fantastic in here. And basically you have a few different levels. You have the ability to add any associate you want to any organization at the engagement level. So even if you've done prior engagements for this client, but you really only want to have people see one piece of it, the new not-for-profit, you can do that. You can set this at the organizational level, so you can add people to the organization and they by nature have the ability to see things at the engagement level, or you can have folks at the top level. So absolutely. And just as we're doing that, I brought up the not-for-profit views, so you have the ability to see what we're talking about. So here's a not-for-profit, one that actually does have funds, and I can very quickly cycle through and say, hey, I want to know, what this particular fund is doing or what this program is all about. And I can go and see any of the data and transactions really quickly. I mean, how amazing is that? In potentially minutes of me loading data, I'm getting this type of view, the ability to go back and see all of that data very, very quickly and go in and understand any of these things. But from a security and an access management perspective, absolutely. We'd want you to only be able to give access to the right levels of granularity and be able to get there. So if I don't have access, it gives me that wonderful no access that I popped up for you to see. Hopefully you saw that flash pretty quickly. But yes, anything you want to do in those models.
And thanks, JC. And we have a question here from Enoma, and the question is, what is the application of internal auditors for AI Auditor? In addition, is there integration to SAP?
So let's hit the internal audit question first, and then let's talk about data in general, and we'll answer the SAP question. So really great question. I mean, I think there's a number of different ways that internal auditors have started to adopt and deploy this technology. From an analytics perspective, what we hear from internal auditors when they talk about how they manage internal financial audit components, they want to move to continuous. They want to move to highlighting the most relevant and interesting things. So what we find is internal audit teams can really expand their capability and really their capacity, right? We can't invent more time in the day. But what we can do is give you a lot more focus on what you need to do. So for internal auditors, there's everything from, you're worried about cybersecurity, business continuity, disaster recovery, all these other things that are not even necessarily, what an accountant was trained to do. And then you spend less than 10% of your time typically on the actual financials of the business. And the bigger your organization gets, the more likely you are to not be able to get to it in a timely fashion. So you'll build an audit plan at the beginning of the year or halfway through the year based on guidance from the stakeholders. In some cases, that's from, say, the chief audit exec, and they say, this year we want to focus on these 3 divisions of a business. Well, that seems kind of silly. If you have 10 divisions, why don't you look at them all? So what you get with AI Auditor is you have the ability to actually run data through on a more continuous basis, have it come in on a weekly basis, monthly basis, quarterly basis, and have it crawl through every area of your business and highlight and focus you to those, small percentage of things that are really important. So what we find is for internal audit teams, think about all the things that you can't do today with payables, with receivables, with just what's hitting your ledger, making sure that you can view controls, measures on topside adjustments, management entries, etc. You now have a platform that can take all of that financial data, really try to make sense of it for you and say, here are the 6 transactions. Oh, sorry, in this case, I've got one high-risk transaction in what I'm showing you. But here's this one transaction that had really high degree of score. I click in and I can find out, well, what's happened in that? Well, I can see that in this case, again, I'm slipping into not-for-profit. So maybe you'd work in not-for-profit, but this is showing me that something's transferred from funds and asset class from fund to fund. It's split multiple expenses across multiple layers of things. I can find out exactly what's going on with that transaction. So from an internal audit capacity perspective, we're going to dramatically enhance what you do with that 10% of your time. You're going to be able to see data more quickly, more effectively, and most importantly, with a higher degree of fidelity in terms of what could be wrong with that transaction, what type of control might have been breached if you bring in user access, and away you go. Now let's talk about data for a second, because I think that is a very important piece of the puzzle. I think it's really relevant to the conversation. We have the ability to ingest data from pretty much every ERP that's out there. There are some that are a lot harder for us to help you get data from. We can do that. Our MindBridge Assist down here on the lower right-hand side, our team is available. We have an AI bot also there. We have a knowledge base also in there where you can just ask us questions. You have an SAP system, right? You're going to type in SAP. You're going to go ahead and pull the data. I'm in a preview environment, so I don't have all my docs loaded, but SAP would normally come back. And when I do that, it's going to give me a relevant piece of information. Let me just move back to production for a second to kind of show you what that looks like. I'm going to go in and look at SAP. And very quickly, I can see that there's, a very easy to read how-to on exporting the SAP details. I could pick Expicor, I could pick Dynamics, anything you want out there. So that's kind of as easy as we try to make it is. We give you the how-tos to get in there. How does it actually happen? I think there was a small little gap in the technology there. I think we're back. But how does that actually happen? So I have these how-tos. How do I actually get data in? Well, I can go in and I'll just pick one at random here that's one of mine, and I'll show you what that kind of looks like. So you have the ability to go in, and if I create a net new engagement, give it a name. I'm going to go ahead and make this one of my for-profit ones. I'm going to go in and pick a bunch of information. Where is this data coming from? Let's pick Sage 50. And then what it's going to do for me is it's going to go ahead and let me add in all these pieces. Sorry, my clicker, there we go. Clicking is working again. And I can go in and actually add that data in. So I'm going to very quickly hit save, and we'll go and grab a ledger detail. Now, we do directly connect with some cloud online ERPs, but essentially you can drag and drop of any of those ERP files that we know about. You can drag and drop those reports right here into the screen.
Thanks again, and have a wonderful, wonderful morning, afternoon, or evening. Take care.